Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have explained you about pricing decisions, how important pricing decisions are, what are the factors to be considered while fixing the price, and what are the different methods or methodologies of pricing. Actually, so many methods are there, so many approaches are there for fixing the selling price. But I have selected 5 methods which are very common methods. 3 methods already I have explained you in the last video, that is cost plus pricing, penetration pricing and competition based pricing. So out of 5, 3 methods already I have explained in the last video. Remaining 2 methods, that is skimming method and promotional method. These 2 methods I am going to explain in this video. So this video is the continuation of the last one. If you have not watched the last video, I suggest you go to the playlist of my channel, select the subject financial decision making 2. Select the video of pricing decisions first video. Be clear regarding the meaning concept. In examination, you may get a theory question regarding what are the different methods or what are the approaches in pricing decisions. Very important questions frequently asked in examination. So watch the video till the end. Don't skip in between. So before proceeding ahead, take the screenshot of the points which I have written on the board, then I explain every point in detail. Now, first skimming pricing. Here 2 methods I am going to explain. First one is skimming pricing. So some businesses may launch a product into the market charging a higher price for a limited period of time. This skimming is opposite of penetration pricing, what I have explained in the last video. Penetration pricing means charging a low price for a limited period of time, and skimming pricing means charging a high price of the new product. High price of the new product for a limited period of time. So we can see some of the products are there which are very costly when they are launched, when newly introduced into the market. But over a period of time, when rival comes, when competition increases, the prices slowly will come down. That means charging a high price in the beginning is called skimming. This is called skimming or creaming pricing. The main objective is to generate high levels of revenue with the new product before competitors will arrive on the scene. The main objective of this skimming is the producer wants to get a higher revenue, more revenue from the sales before the competitors, before the rivals will enter into the market. Now this pricing strategy often used by Apple when launching new products. So Apple company, normally they will follow this skimming pricing. They will charge a high price whenever a new product of Apple is introduced in the market. They want to get maximum revenue from the customers because they are the first to enter into the market. But slowly over a period of time, when other competitors enter, slowly the Apple will reduce the price. Now in the market for some goods, there is a group of consumers called early adopters. We have different types of customers in the market. A group of customers can be declared as early adopters. They are ready to buy at any price in the initial stage only. Whenever it is launched, immediately they want to buy first. They want to be the first buyer in the market because a status symbol that we have purchased even at a higher price. They are called early adopters. These people are prepared to pay higher prices because they like to be the first buyer. As a status symbol, these early adopters even want to pay the higher price because they want to have the product as the first buyers. And it has been suggested that early adopters are younger, have a higher social status and have a higher income. So these people, early adopters, normally they are ambitious. They give more importance to social status. That's why the early adopters are young people who have more income, more money. They will give more importance to social status. It is observed that 13% of the consumers A study has been conducted in a number of markets, and it is observed that almost 13% of the consumers are early adopters. They want to pay a higher price at the initial to be a first buyer. Then pharmaceutical companies, and it is observed that the skimming pricing is normally adopted by pharmaceutical industries. When a new drug is made, when a new medicine is made, they will charge a high price in the initial stage. Till the patent right they are having, they will charge high price. Once the patent expires, then what will happen? Other competitors will start making that product. Then slowly the price will come down. So pharmaceutical companies also use skimming. They sell new drugs for a high price when they are first launched. However, when the products expire, patents expire, competition emerges and price will fall. Charging a high price initially helps in the companies recover high research and development cost. What is the contention of the company for charging higher prices initially? The company's contention says that they want to recover the research and development cost which they have incurred in making the new product. That research and development cost has to be recovered in the initial stage only. That is the reason why they will charge a higher price in the beginning. This is the complete explanation about skimming pricing. Now I am coming to the last method called promotional pricing. 4 methods I have completed. Last method I am going to explain, promotional pricing. Promotional pricing is also one of the strategy where the prices are set at a low level for a short period of time. For a short period of time to promote the product. To promote the product, the businessman is charging a lower price. Promotional pricing usually involves lowering the price of a product for a short period of time to draw in customers. The main intention is to capture. So to draw the customers for a limited period of time, they are charging low price. But this promotional pricing is different from penetration pricing, right? Remember this. Now, the prices to be cut for a number of reasons, such as why the prices are slashed, why the prices are cut for a limited period. Number of reasons are there. So we can briefly explain the reasons are to get rid of old stock. Suppose if the stock is accumulating, the old stock goes on accumulating every day. The supply is more but the demand is less. To clear this old stock, they will slash the price. Earlier the product was sold at 100 rupees per unit. Now they will slash it to 80 rupees. Because they want to get rid of this old stock. So this discounted price for a limited period is to remove the old stock. Secondly, to generate some cash quickly to help the cash flow problem. Sometimes a business may have cash flow problem, cash shortage problem. Immediately the company wants to overcome the problem of cash flow. In that case, they will sell the product at a lower price for a limited period so that cash is generated and we can be able to solve the problem of cash flow. Thirdly, to generate renewed interest in an existing product. That means we have to regenerate the interest of the customers in the product. Otherwise, the customers will go off. That means we have to maintain the customers. Present business strategy is not to generate new customers but to maintain the old customers because a lot of competition is there. So to make a renewed interest of the customers in our product, we are allowing them discount. Then to attempt to win larger share of the market by encouraging brand switching. Nowadays, customers will move from one brand to another brand. Switching between different brands is a common feature right now. So that's why to encourage the people to make a brand switching. Example, a person is always consuming a particular product, always consuming. Now that different product, a new product, wants to encourage the people to switch on from that old product to our new product. By offering us a cash discount, we are giving a discount. So these are the reasons why the prices will be slashed for a short period of time to promote the product. Now, there are a number of different approaches to promotional pricing. Different approaches are there in this promotional pricing. Some of the examples are discounts and sales. We have seen at a number of times discounted sale is there. The business will offer a discount on different products to the customers. Businesses often cut prices for a short period. They have sales where goods are sold below the standard price. Normally, the standard price of the product is, let it be 100. Now, for a short period of time, we are giving them discount. We are reducing the price from 100 rupees to 80 rupees. Standard price 100 rupees. But now, after discount, we are giving them at 80 rupees. But this discounted price is only for a short period of time. Then some of these sales are seasonal sales. Example, right now, Ramadan, the holy month of Muslims, is going on throughout the world. So number of sales are at discount because the people will buy more goods during the seasonal period. Apart from Ramadan, different religions have different festivals like Christmas or different festivals. So during festivals period, the sales will bound to increase the revenue, to increase the sales. The businessmen will give the discounts. So for example, in some countries, sales may occur at a particular times. Now, psychological pricing. First one I have explained you. First approach of promotional, pricing is discount. Second one is psychological effect. Some businesses will trick the psychology of the customers by charging a price which is just slightly lower than a round figure. This is also one of the method of increasing the sales, of promoting the sales. So one common pricing strategy is set the price slightly below a round figure, charging $99 instead of $100. Or 100 rupees is fixed as 99 rupees. Slightly, 99 is very close to 100. So instead of charging 3 figure, we are charging only 2 figure. Actually, the difference is not much, only very small difference, only $1 difference is there. But it will make a psychological effect in the minds of the customers. Consumers are tricked into thinking that $99 is slightly cheaper than 100. The businessmen are playing with the psychology of the customers. So that customers may think that we are paying only 2 digits instead of 3 digits. Suppose the competitor is charging 100. Whereas this business is charging 99, so they will get in mind that 2 digits 99 is lower than 100. In this way, the businessman will play with the psychology of the consumers. Of course, this is not, but this psychological effect often works for the business. So we have seen in the real world also right now, the prices are charged like this psychological pricing. Next comes loss leaders. This is the last promotional pricing method. Loss leaders. That means in some cases, the products are sold even at a below cost price. That means the cost to make 1 unit is 100 rupees. But the business is selling that goods at 80 rupees also. That means we are not recovering the cost itself. There is no profit at all. We will get the profit only after cost. So some products are sold below the cost. That is called loss leader. Why? Why the business will sell the goods at a loss? Different reasons may be there. Some products are sold at a price lower than cost. These are called loss leaders and are popular with supermarkets. Supermarket, hypermarket, in these markets so many different products are there. Thousands, hundreds and thousands of products are sold in the supermarket. In this case, some of the products are displayed at below cost, at a very cheap rate, so that the customers comes in the supermarket to buy the goods at a lower cost, at a very low price, which is below cost. Why? The supermarket think that when the customer enters the market, they will definitely buy the loss leaders. They will buy the goods which are very cheap. Apart from that, they will look the other products also because it's a hypermarket, supermarket. So they go to buy the loss leaders, but they are inclined to buy the other products also because other products are also there. So whatever loss they are incurring in the loss leaders, the business can get the profit by selling other products also. This is also one of the trick loss leaders. The objective of this strategy is to draw customers into the store where they will buy the loss leaders. The main contention of the supermarket is to draw the customers. That means engage the customers in the store. Once they come in the store, definitely they will not buy one product, they will buy different products. So once in the store, it is hoped that customers buy other products also. Overall, this will generate a profit. So ultimately, it's not a loss to the business. The supermarket will earn the profit by selling the loss leaders and also other products. That's all. So this is the end of this video on pricing decisions. So unit number 2, first topic is pricing decisions. 2 videos I have completed. The next video I'm going to start on target costing. So inshallah we'll continue in the next video. If you are satisfied, give a like to the video. Share my channel among your groups, among your friends, so that more students can watch the video and enhance their knowledge, get confidence on the subject, increase your knowledge, and give your comments on these videos. Subscribe if you have not yet subscribed my channel, and by the super thanks which is given below my video, inshallah we will continue the next topic in the next video.